It's Sunday, the 7th of October 2018. The US dollar gold price continued to hover around this critical sort of 1200 zone this week, as it has done for the last couple of months. I'm starting to get a turn a little bit more bullish on this now. I think the last video I did it a couple of days before the last Fed interest rate decision, and that was this candle here where it broke down. You can see there was I sort of talked about this little triangle pattern forming here, and I thought it would probably break down after the Fed interest rates decision, and that happened. But then it was bought fairly quickly, and I'm starting to see that a bit more now. That when the gold price is pushed down below this 1200, below sort of 1190, you're starting to see more buying pressure come in, and I reckon that slightly the bulls are starting to win this battle here, and we could be starting to see a bit of a bottoming pattern and a bit of a move up, maybe to 1250 or so potentially in the short run. Um, it's a little bit similar to the 2016 or late 2015, early 2016 bottom. Generally, the bottoms since then have been these sharp moves of bottoms of about a week rather than this 1 to 2 months length. But in general, I'm starting to feel pretty, especially with the some of the bonds action. Despite rising bond prices, that hasn't rising bond yields, which is perceived to be bad for gold or has been for the last few years. It's actually been gold's held very firm, and despite the US dollar index has been rising as well. So you've seen that effect of the dollar index and gold rising together. I've got the dollar index chart here, and it's a sideways sort of move, but you can see in the last week or two, it just had that good move from sort of 93 up to 95 and a half in the last week. But that's the main story has been in the bond yields have really broken out this week. You can see they've broken this critical sort of zone around 3 to 310 on the 10-year yield, and we're into kind of a blue sky territory where we haven't seen bond yields pass this high since 2011, and I think we could see a move, following this sort of this stepping pattern here. You can see this is a bit of a flag forming here, and it's broken out above this 3 to 310 zone, and it looks like it wants to go a lot higher. There's not a lot of clear resistance levels above, so it's potentially a move a lot higher. And I'm not sure if the market's really fully understanding that. And gold is performing well despite this, and usually that hasn't been the case. So starting to sort of a bit of a change in attitude in the market, and maybe that rising yields are not a sign of strength in the U.S. economy, and are maybe a sign of increasing supply of bonds to fund the U.S. deficit. So I don't know if that's just a little bit of an indication, but you're seeing that's been coupled with a falling Australian currency, which I'll get to in a second, and also the bond yields are it's very much starting to feel like late January in the US stock market, where those rising bond yields really started to spook the market, and you had that big sharp sell-off, and you just saw a slight little bit of panic in the last couple of days. Obviously, it's very close to the all-time highs still, but there's just exact type of feeling after that strong rise, and the bond yields rising. Some of the tech names are starting to sell off heavily as well. The Nasdaq's down a lot more than the S&P this week, and it's just starting to feel like it could roll over. And if those bond yields start surging higher, I think the stock market's going to have a bit of a panic attack here, similar to January and February. So that's something to watch out for, and I think that probably the bond yields are the main story. But if the gold price can stay steady, I think that's probably a pretty good thing for the gold miners, which is what I play mainly. You've seen the Australian dollar really get crunched this week, down to new almost 3-year lows, lowest since early 2016. And it doesn't look like there's any signs of strength forming here, and conceivably could be below 70 cents this week quite easily. The previous lows just under 68 and a half there, in early 2016. So, this Australian dollar chart on a long-term chart is very weak, and I think it's going a lot lower. Um, if you recall, I sort of was talking about a $2,000 Australian gold price was my target. Probably I don't know when I made that call, probably 12 months ago. So we're probably not going to get there in the next 6 months, but they're starting to just all the little things that go into the Australian dollar gold price are starting to be positive. It's almost trying to reclaim that. Just get the sizing right there. It's trying to reclaim that the lower trend line that it broke down from in July there. So we're shooting up nicely this week. You can see it's up more than $60 on the week in Australian dollars. And I think that's presenting some pretty good opportunities in some of the Australian gold miners. I'll do a video on them as well separately, but I'd been a bit bearish there. Some of those charts were pretty weak on the mid-cap miners, and a lot of them had fallen 20 or 30% in the last 3 months. But I think it's probably been we're at a good buying point now with the broader sort of fundamentals for Australian dollar gold looking very strong. Whether we see one of these sharp shoot ups, it does look, seeing those, when we get these nice rows of green candles, those moves tend to last a little bit. I don't think this is going to just abruptly stop. I think the fundamentals now are for it to head higher again. So a lot of those mid-cap miners making, their $700 or $800 margins in Australian dollars are in great buying territory again. What else? The GDX as well, I think potentially is starting to look interesting. The sentiment hasn't shifted in the gold miners yet, but nice little sort of bottom starting to form here. It's taking a while, but potentially a bit of a mini head and shoulders pattern there, inverse head and shoulders. So, I don't really trade the GDX, but it is a sentiment indicator of the broader gold mining indices. Starting to see some takeover activity as well, which I'll talk about in the other video in the gold mining space, and it's just starting to see a little bit of sentiment change, and I think probably represents pretty good buying here. I've been just cautious because I know these bottoms can take a while. I think I mentioned this, this 2015, 2016 bottom took 6 months to form. Whether it takes as long again, who knows? But I think GDX probably in a relatively good buying zone here, and particularly with that, that some of that takeover action, and there's clearly sort of value being shown. A few other investors who are not traditionally in the gold space, I think, might start to look at those gold miners. So all in all, I think we're at an interesting point, and as I said, feels very much like early 2018 when the US stock market had that sharp sell-off on higher bond yields. But that bond yield story could get out of control fairly quickly and start to spook the stock market, because those high valuations are only sustained by having really low interest rates and really low bond yields. So with those yields shooting up, and if it starts to feed into a story of lack of confidence in the US government debt, that's always going to be the best story for gold. And the gold chart's starting to show that as well, as I said, with not breaking down on some of the things that have held it lower in the last few years. Those expectations of higher yields being tied to US economic strength are kind of changing now, I think. And if it starts to be tied to inflation expectations and lack of confidence in government debt, that's a different story altogether, and that's when we could start to see gold move again higher. So I think really good sort of buying action potentially here in gold in the short term, and some of those Australian gold miners in particular.